You're listening to the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play.
The futures markets can be downright scary. Limit up, limit down. What the heck is RBOB anyway? Are they going to dump a truckload of soybeans on your front lawn if you click the wrong button? Come to think of it, maybe you should just stick to your comfort zone. Or you can break out of it with the Futures Rundown. The Futures Rundown is here to help you make sense of these scary markets. We'll analyze all the top futures trading activity, explore the ins and outs of your favorite products, explain exactly how futures work, and hear from leading experts in the futures markets. We'll even tackle all of your wildest futures trading questions. If it involves futures, then you'll hear about it on the Futures Rundown. Old trading walks into a bar. New trading raises it. That's Tasty Trade. Keep focused with news feeds that matter. See opportunity differently in analysis mode. Chart your heart out with over 300 indicators. Plus, you can get low pricing, lots of education, and a support team that really gets how traders trade. It's no wonder Investopedia named Tasty Trade the best broker for options in 2024. Genius loves company. Go to tastytrade.com/podcasts and see for yourself. Tasty Trade Incorporated is a registered broker-dealer and member of FINRA, NFA, and SIPC. And now, it's time to break into the futures markets. It's time for the Futures Rundown.
All right, everybody, that music means it is Wednesday. Time to wade bravely, some might say foolishly, into the futures markets. Yes, it is time once again for the Futures Rundown. My name, of course, Mark Longo from the Options Insider Radio Network, your home for your options and derivatives podcast for now over 19 years. Absolutely wild. Next January, the big 2-0. I wonder what we're going to do to celebrate. And of course, you don't have to wait much longer if you've been waiting for the next volatility death match. It's coming up next week. So get over there, theoptionsinsider.com/pro if you want to participate. You want to vote on the winner, thumbs up, thumbs down, like the Roman emperors of old. Maybe you want to suggest a topic or two for the combatants. Should be a good one. The optionsinsider.com/pro is the place to go. As we find out who's joining us on the program this week, it is time to roll out the Futures Hot Seat.
Let's learn from the market movers, size traders, and leading minds in the futures markets. It's time to roll out the Futures Hot Seat.
All right, everybody, welcome to the Futures Hot Seat, the portion of the show where we welcome on guests from throughout the world of futures and proceed to pick their brains for the benefit of you, the listener. And next up on the program is a return offender, even though it's been a while since we checked in with him. Mr. Dana Samuelson, the founder and president of the American Gold Exchange. Dana, welcome back to the Futures Rundown, sir.
Hi, Mark. It's great to see you again. Thanks for having me back.
Well, you know, last year, a bit of a wild year, especially in the metals. I can't recall, I said at the top of the show, we've been doing this for over 19 years now on the options podcast side, and obviously longer than that on the options trading side. And I can't recall ever talking this much about precious metals as I have in, let's say, the last 2 or 3 months. It is inescapable. Even folks who don't care at all about metals have been asking about silver in particular. It was gold for, I would say, the first half of the year. Then silver started to steal some of that thunder. Then it was back and forth, gold and silver all throughout the year. We were just talking about gold on the last program. We just got off as well. So it's a hot time to talk about metals, and we had the perfect person to do that with us here on the show, listeners, from the American Gold Exchange. Dana, the last time you joined us was actually a little over a year ago. It was January 8th of last year, so a lot has happened in the world of gold since then. Let's look back We've been doing this with a lot of our guests, but you are obviously in a unique seat, a unique perspective to look back on the madness that was gold in 2025. When you look back at that market, sir, what stands out to you?
Well, it was the most incredible year that I've seen in my 46 years of being in these markets since 1980. I caught the tail end of the first big boom from 79 to 80 at the end of 1980. And I've never seen anything like we've seen this past year. If you were to ask me to guess where we were when I was on the show last time, I would say gold was probably about 28.75, 29 and a quarter, and silver was probably $29 to $32, somewhere in there. And we saw just remarkable gains this past year as the world went on a global physical buying spree, driven primarily by the uncertainty in the global economy created by the Trump tariffs and what has now become known as the debasement trade, where countries around the world are looking to find an alternative asset to the dollar or U.S. treasuries. And precious metals, gold in particular, is a perfect asset as a neutral reserve asset that is immediately liquid around the world. So there's just been huge demand for gold and silver, to a degree, platinum and palladium as well, creating outsized returns that the likes of which we've never seen before in these metals since they've floated freely beginning about 1971, 72.
I'm glad you said that, because I've been asking a lot of people over the last 4 or 5 months, have you ever seen anything like this before in the gold market? And the answer is usually a resounding no. We get a couple of people chiming in for the late 70s with gold and the Hunt Brothers time in the early 80s for silver. Even then, we've already surpassed the Hunt Brothers prices in silver. So it really is an unprecedented year, especially when you think about it through the lens, Dana, of gold at the end of the day, whether you agree or not, is the psychological underpinning for pretty much every major global economy. So the notion that this extremely important asset was up over 50% in a single calendar year is absolutely wild. I don't think even the most extreme gold bugs, when you and I last talked, would have had anything even remotely like that on their bingo card. If they did, they would have been laughed out of the room. So just an absolutely wild year. So I'm glad to see it's not just me as a relative newcomer to the world of metals. You've been doing it for a bit, and this is like nothing you've ever seen before, Dana.
Correct. In fact, what's remarkable about this past year's appreciation is that we've had 3 red-hot precious metals markets that I've been alive for. The late 70s, again during the great financial crisis, and then again during COVID. And what do we have in common in all 3 of those events? Well, a crisis of confidence of some kind in the U.S., either geopolitically, economically, or some other destabilizing event like, economic closures. This market, where gold went up, about 70% last year and silver over 200%, occurred when there was not a corresponding crisis economically or geopolitically in the U.S., which is unusual, which shows you, I think, if you think about it outside of the U.S. and looking in, how the world felt that the tariff regime by President Trump kind of destabilized things. So it may not have been a crisis for us, but I think a lot of the rest of the world thought that, to a degree, that it might lead to a crisis of some kind for them.
Yeah, we saw an interesting 2 halves to the year last year when it came to gold. We saw the first half of the year, we saw a very impressive run up. A lot of our silver fans in our audience were very mad because silver wasn't participating. In fact, when gold really was hitting its next wave of all-time highs around the middle of the year, silver was actually selling off for a brief period. So there were a lot of angry folks on that front saying, why isn't silver playing catch up? Then, of course, fast forward to the second half of the year, gold retreated off its highs a little bit, and then it really was just reloading the gun, Dana, because it just turned around and had new rallies pretty much the second half of the year as well. And we saw a lot of different narratives emerge around gold last year. It kind of depends what type of trader you are, I think, how you look at gold. There were a lot of people in the middle of the year last year when we saw this really impressive run up in gold. The other precious metals weren't necessarily following suit. And we saw a little bit of kind of wishy-washy action in the equities, and we saw volatility in the equity market starting to drift lower. And people were saying, well, this is strange. We're having dueling signals in terms of sentiment, where on the one hand, the VIX, which is supposed to be the fair gauge, is drifting into the mid-teens, telling us really not a lot going on right now that's really cause for concern. And meanwhile, you have gold. I don't know if it could ring a louder alarm than it was doing, just blowing through new all-time highs every day. So we had a bit of a strange bifurcated view on market sentiment. What are your thoughts on that? The use case of gold as a gauge of market sentiment and the fact that it was diverging just about everything else through midway of last year.
Right. And that's an excellent point. Gold basically decoupled due to its price appreciation from the traditional, monetary or economic relationships it had. Inverse correlation to the dollar, treasury yields. Certainly geopolitical events were, pretty hot last year, but not out of the ordinary compared to what we've had. And a lot of it had to do with tariffs. When we ramped up tariffs on Liberation Day, and then were forced to take them back a week later, at that same time, President Trump tariffed China up to 145% because they were the only country that stood toe-to-toe with us, which sent the Chinese into a gold buying frenzy, driving the gold price from $2,950 to $3,500 or thereabouts. And we saw a similar occurrence when President Trump tariffed India 50% at the end of August for buying Russian oil, which supports Russia in the war against the Ukraine. But that was really what I think kicked off the massive silver rally that took over the second half of the year for a couple different reasons. The gold to silver ratio when gold took off early last year peaked at about 104 to 1 in April, which is abnormally high. And that led several Indian influencers to recommend they buy silver, Indian citizens to buy silver in lieu of gold when the holiday festival season came in October. And that's what happened. They bought silver hand over fist at record levels last year in India.
All the Indian influencers' fault. There we go, Dana. We finally found the culprit.
Well, that's part of what drove it, but that helped to crack the silver price from $40, $45 to over 50, which then created a fear of missing out rally that took place around the world. And just in the last couple of weeks, we've learned that there was a Chinese investor, Bian Zhiming, who took a big long position in gold last spring into the summer, and then took a long position in silver that turned into a short position of epic proportions leading into the silver peak of $121 an ounce on January 30th, which then, of course, broke. He had a short position, according to Bloomberg, of 30,000 contracts on the Shanghai Silver Exchange, 450 tons, which is more than the exchange holds of 412 tons. And now that position's in a big profit position because he shorted, but he's got to buy those shorts back to earn his profits. And he may be in the process of covering some of those shorts now. So there's been just huge volatility once we hit peaks. Gold at a little over 5,600, silver at 121. And now we're in a consolidation phase like we went through twice with gold last year, both in April and in October, following runs. And it's just a question of, is this going to lead to weaker prices or just sideways prices and then further runs higher? It's hard to say at this point in time, but we are back in a consolidation phase now, which I expect will last a couple of months.
That big short certainly had a good day. What was it? Not last Friday, but the Friday before, when silver had an epic drawdown. Let's go back to the middle of last year for a second. Again, I know you focus mostly on gold, but a lot of people were pointing that out middle of last year, that the gold to silver ratio had just gotten completely out of whack. After that, of course, as you mentioned, blame it on the influencers, blame it on whoever you like. We saw an impressive run in silver in the last half of last year. And then some might say an even more impressive run so far this year. It was absolutely insane. 5-10% a day. We had people coming on our network talking about triple-digit volatility from an options perspective in products like SLV, which never normally exhibit that much volatility. So a lot of just unprecedented things. What are your thoughts on the insane move silver had last year, then maybe the equally, if not more insane move it's already exhibited so far this year, Dana?
Well, silver in particular is prone to subject from supply and demand imbalances. Uh, Central banks hold a lot of gold in vaults around the world. So if there's a need for gold in the short term, it can be borrowed pretty easily, um, uh, especially out of the LBMA vaults in London. But silver is a different story. Central banks don't hold deep reserves of physical silver. And when we had the run last fall in silver, there was a more physical demand for it in London than there was available supply. And we saw the LBMA go into a dislocation or dysfunction last October 9th and 10th when lease rates spiked and deliveries got pushed out for weeks because of demand for physical silver to underpin ETFs around the world. Every country has an ETF in gold and silver now, and they're supposed to be backed by physical. So that's really kind of where the rubber met the road and kind of was an emperor has no clothes moment for the silver market, which I think led to, we've got to get our hands on it now while we can. So I heard an analyst on Bloomberg today call commodities strategic minerals now for governments around the world. And there's been a run on the bank of gold and silver last year physically to get your hands on the physical metal. And silver is more acute to those kind of demand surges. And we saw it both in the LBMA breakdown last October and then in the price run that we've had so far. In fact, silver is holding over $70 an ounce. Now it's between 80 and 85. We did have a $30 drawdown when we had Black Friday 2 Fridays ago. And for most of my career, silver never was over $30 an ounce, let alone have a price movement of $30 an ounce in a day. So it's just a reevaluation for silver because of its need in industry. It is the most conductive metal there is for temperature and electric current. You can hold an ounce of silver, a coin, or a bar in your fingers and cut an ice cube with it in about 5, 6, 7 seconds just from the heat that transfers from your fingers into that silver coin or bar, which shows you how conductive it is. And it's in most electronic components a little bit. So we've seen industry going directly to the supply chain source to secure silver for the future. Samsung announced a battery a year ago, October, for EVs that was silver-based that would charge in 9 minutes and carry an EV 600 miles. Imagine a third of the time of the charging time and double the range. So what do they do? They went to a Mexican mine last October with a $175 million investment to get silver directly out of the ground. That's how critical they want to have a supply chain that's disintermediating the marketplace. And we've heard anecdotes of the Chinese government going to 2 different Canadian mines in December, offering to buy silver in the ground for $7, $8, $9 an ounce more than the spot price. And that's another sign that the world wants to get their hands on silver in particular as a national security component of what they need for industry. I mean, we've never seen anything like this.
I'm glad you mentioned the physical metal because that comes up quite often when we're discussing metals. I know obviously this is a futures show, so we're looking at it through the lens of the futures. A lot of people like to play through the ETFs. Obviously, GLD and SLV are very popular, but there's a certain contingent out there, whether it's grandma's silver and gold in the attic or in the safety deposit box, or maybe they're going to get the Costco coins that are on sale that week, whatever the case may be. There is a certain contingent out there that likes to play in the physical. It's a challenging trade because, of course, the liquidity of actually being able to sell the physical when you want to is quite challenging. We hear all kinds of horror stories of people in our audience having to go to pawn shops, whatever the case may be, getting faced with ridiculous spreads where obviously if you want to sell the future or the ETF, there's a clear displayed liquid market, a bid you can hit. It's a little bit more reliable from that perspective. What are your thoughts on folks trying to trade the actual physical metals there, Dana, and maybe some of the challenges lurking therein?
Well, I'm a physical dealer, so I know all that intimately. the physical product, you've got to make sure you get legitimate product to start with. And there are spurious coins and bars out there, primarily coming in the marketplace in the US via China through online auction platforms and private sales. You have to be careful.
Are you saying the Costco bars are not legit, Dana?
No, the Costco bars are legit. I know who supplies them. It's a Swiss refinery and a US mint distributor. I know the people I trade with the people that have the Costco account. So they're good. Don't worry about Costco. But you got to worry about pawn shops or some of the smaller, non-professional operations out there who don't know the real deal. So there's that. There's friction to the transaction because it is a physical item, and there's a buy-sell spread that's wider than on a futures contract or an ETF. Now, I do trade futures contracts to hedge our position, our physical inventory, and I do trade ETFs in my IRA as a great way to harness profits without having to pay taxes on them at this point in time. In fact, I love a couple of leveraged. I love one particular silver ETF that's leveraged, AGQ, and I trade it. But you've got to be bold because it's a double, twice as twice the profits, twice the losses if the market's going against you. But the physical market is unique in that you really need to find a dealer that you can do business with that you trust. And I would look for longstanding members of the community who've been around a long time because we're unregulated and there are opportunists who come into the marketplace whose objective is simply to take some of your money and to put it into their pocket, right? So you got to watch out for those people. What's been unusual about the futures market this past year for gold, for both gold and silver, is we've seen extended periods of backwardization where the spot price was higher than the futures contract price, which meant the market was placing a premium on what they could get their hands on right now. And we've seen it particularly in silver when things got really tight. And that shows you that's a sign that there's a world wanting physical product. And we had some dislocations in inventories because of fears over tariffs, where metal moved into the COMEX exchange, last December 24 through April, May of 25 for gold at record amounts, and for silver all the way through October of last year. The COMEX exchange had 531 million ounces of silver in it last October. Normally they have 200 million ounces. Now that's migrating back out now, down to about 390 million ounces today, but still about double what's normally there, which helped to create some of the immediate short-term physical issues that we've had. So it's just been a wild, wild ride. And now we're in a consolidation phase. I see gold trading primarily in about a 4,700 to 5,150 range, silver in the $70 to $90 range, primarily in about 77 to 87 right now as a trading range. But there's going to be some volatility. So you have to be careful if you're trading futures or options right now, which side of the transaction you want to pick, and your timing is actually very critical at this point in time. It's hard to say how this is all going to settle out.
I'm not surprised these futures went backward recently. I mean, how could it not be, especially this year in silver, right? Things were so extreme. If you're not backward now, when are you going to go backward in some of these products? But I have to get your opinion on this. This question just came up on our last show earlier today. It was a listener question. It's a frequent topic of discussion on our crypto program, and it's the topic of Bitcoin as a digital gold. It's been debated hotly for years now. I have my thoughts on it, but I'm curious, you come to it through the lens of gold. Where do you fall on this comparison of Bitcoin as digital gold, sir?
Well, Bitcoin does one thing, and cryptocurrencies can do this, that no other asset can do, which is move real money, wealth, over borders privately. And I really think that is Bitcoin's greatest attribute for private citizens. You can't move gold or currency over borders without a lot of government intrusion. But Bitcoin, you can. So I do think of it from that standpoint. And now it's much more speculative, as we've seen, with much bigger runs, both up and down. We're in a corrective phase right now, where gold is much steadier. And we've seen a bifurcation of audience for Bitcoin, primarily people under 40, 45 that are used to growing up with cell phones in their hands. versus, the older crowd, which I'm part of, which tends to favor gold over Bitcoin, just because we're more traditional. And when Bitcoin first came out, I didn't really understand it. I get it, of course, now, but there's a place for both in a portfolio, and they both have their independent uses. But gold is much more stable. It's unusual to get the kind of returns we got last year, and we may get again this year for gold. But Bitcoin, to see those happen a couple times, right?
Well, speaking of those returns, and we have to keep rolling with the rest of the show. But before we do that, you mentioned a few times some thoughts about what's to come this year. Give our listeners a little bit of your outlook for gold and precious metals for the rest of the year.
Well, the trends that drove gold and silver higher remain in place. Economic uncertainty due to the tariffs. I think things are settling down a bit now. With that regard, we're getting back to, the rubber's kind of meeting the road, and we're figuring out where they really are going to be. So we're going to have a bit more of a settled global economy. Inflation remains pesky. We're seeing, treasury yields rising, which typically doesn't bode well for gold because gold doesn't pay a dividend. But we've had two instances in the past year where we've had central bank bond blowouts. The U.S. had one in April of 2025, and Japan just went through one. And they're the biggest debtor nation for per capita in the world. And it doesn't bode well for fiat currency holders who are losing purchasing power due to inflation and continual growth of debt. And I think that's part of the attraction globally for physical precious metals. So I think we've got a pretty good base for gold at 4,500 to 4,700. It's looking like we've got a real good base for silver at 65 to 70. I think gold could be 6,000, 6,500 by the end of this year. Silver, I think could be $140, $150 an ounce. It could be 95 by the end of the year. I don't know. It's really hard to say after the wild run that we've had. But as long as the world economy holds up and demand for physical metals remains pretty good, I don't think we'll see a washout. In fact, we may have seen the biggest washout we're going to see just in these last couple of weeks.
Yeah, maybe Black Friday was it. We shall see. But now it's time, listeners, to keep rolling with the show. It is time to enter the trading pit.
It's time to break down all the action that's lighting up the futures markets this week. What's limit up and what's crashing and burning? Let's find out. It's time to enter the trading pit.
All right, everybody, let's get down to business, see what's lighting up the futures markets out there this week. We'll kick things off to the red before we get to the green and what's lighting up the screens to the green. I think you can probably guess, given what we were just talking about, what is dominating some of the green again this week and has been doing so far this year. But to the red we go first. Number 5 to the downside this week, listeners, are going out to cocoa. We've been saying for a while, if coffee's too pricey for you, need an alternative hot beverage, you don't need the caffeine, maybe you don't mind the sugar, then perhaps cocoa is your huckleberry, where it's off another 7.3% this week, so continuing to get cheaper. Number 4 to the downside this week, one of the EMs. Which one? No, not the one perhaps you're thinking of. It's lithium again. Number 4 off 7.75%. Number 3, not going to be music to the ears of our crypto lovers out there. It's Bitcoin, both the big and the micro futures selling off again this week, right around 7.8% to the dark side. Number 2 this week, nat gas coming back to earth. Makes sense, maybe, hopefully the polar vortex is behind us, at least here in Chi-Town. So seeing nat gas take a little bit of a turn to the dark side, off 8.33% this week. And the big loser once again this week, unfortunately, for all of you hodlers out there, ETH taking it on the chin again this week. The micro and the big futures off about 10.25%. Dana, I know we just talked about crypto and its relation to the metals, but anything else catching your eye in our downside movers this week? Are you a big trader of lithium, perhaps, sir?
No, I have traded a bit of natural gas over the last 6 months, thinking we might have hit a bottom and then a breakout, but it was a false breakout, of course, which has now given back those gains. So, I put tight stop losses on my position when I play ETFs. So you got to be careful. And I'm not sure what caused the natural gas spike that we had, which was just an outside move 2 weeks ago, absent the polar vortex, or whether it was just an options. It was a day where the options closed out.
It was a weird one. It seemed nat gas seemed to play out like textbook, the coldest week of the year, the highest nat gas prices of the year. Obviously, there was more to it than that, but on the surface, it seemed to be the most cliche move in nat gas ever.
Right. And I do like uranium for a long-term play, to be honest with you, just because I think we're going to move to a lot of smaller micro nuclear reactors to supply the power that we need in this world. Like Europe has had them for years and China has, and we don't, but we'll get them here in the U.S. I'm convinced. So I like uranium as well, but I haven't found my entry point yet.
Yeah, uranium's a challenging one. We talked about it on this show and others on the network. It's not the most liquid of markets. So there's a variety of ways you can do the uranium miners. You can do the small reactor makers. All of them have been hot and then cold and then hot again and then cold again over the last year or so. So it's a challenging market, listeners. Maybe we'll see uranium back on our moving and shaking list again in the near future. As we go to the upside, a few usual suspects here again this week, including number 5, kicking it off in dairy again. We were joking about dairy last week on the show, but it is back. Cash settled butter up 2.5% this week. Number 4, out to the realm of FX we go. In particular, it is the yen. The yen up 2.7%. Number 3, it's soybeans up 3% this week. Number 2, a product Dana is quite familiar with, one we may have just talked about most of the show. It's gold, up a little over 3%, 3.1%. So actually a kind of quiet week for gold compared to what we've seen of late. And then number 1, our old pal OJ, after getting annihilated for the better part of the last year and a half or so, getting back about 9.5%. So I guess if you wanted a nice cheap breakfast beverage, not the week to be buying your OJ. So obviously, Dana, your favorite over there, gold coming in at number 2 to the upside this week. Actually, as I pointed out, 3% is kind of muted these days. What are your thoughts on the move in gold and anything else to the upside?
Well, when we had the sell-off 2 weeks ago in both gold and silver, platinum and palladium as well, I mean, these markets always tend to oversell when we get a downdraft, especially the magnitude that we had. So I'm not surprised that gold is rebounding from what I considered an oversold condition under about 4,700. It's about 50.70 right now, 5,100, close to that level, which I think is fair value. I think the world is going to find that silver still may be a hair undervalued, under $90. We'll see how that plays out. But as I said, I'm not sure the volatility's out of it. I think gold will be pretty steady from here for the next couple of weeks, give or take, 1 or 2, maybe 3%. So it may be on the red next week and then on the green the week after. We'll just have to see how it goes.
We shall also see if the futures market is lighting up the tape out there today. Kind of a weird Wednesday because we had a non-farms report this morning. So you don't usually see that. Usually we see that on Friday. So kind of gumming up the works a little bit. Did it add to some volume today? The answer was yes. A hot day on the futures market. Usually coming into this portion of the show, we say things are fairly active if we're over 300,000 contracts in the futures world. Threatening 500,000 right now. 478,000 contracts is what it cost you to break into the top 10 today. Once again, it's pretty much all rates and equities all the time, and also only one contract expiring outside of March. That is in December. Again, you can probably guess what it is. But number 10, our old pal, the NASDAQ, actually all the way down at number 10, the NASDAQ E-mini, 478,000 contracts on the number 10 spot out there today. Number 9, it's the 30-year, 553,000 contracts. Number 8, we're only at number 8. We're already at 750,000 contracts. So a pretty active day. On number 8, it's the ultra 10-year. Again, 752,000 contracts. Then we jump up quite a bit again to number 7. It's the 2-year, already over 1 million, 1.1 million contracts. So non-farms delivering the heat in the market out there today. Doesn't hurt that we've had a little bit of whipsaw activity in the equities as well, so that's driving some flow right now. Number 6, it's the S&P Micro, so our second equity offender on the list today. Number 6, the S&P 500 Micro, 1.17 million contracts. Right above it, number 5, it's 3 months SOFR, the only DC contract on the list today, 1.18 million for that. Number 4, It's the S&P E-mini, 1.19, so pretty tight there between 6 and 4. And then number 3, I should say, it's the 5-year note, 1.7 million, so a hot day there. Number 2 is the NASDAQ Micro, 1.96 million. That means the big dog, once again, all is right with the futures world because the 10-year note is once again on top of our most active list out there today. Dana, when you're not slinging gold, are you trading any equities or rates? Because that's what's dominating the tape out there today, sir.
Well, I'm not a good equities trader myself. I like commodities better, but I do like to try sometimes to play the spread between the 2 and the 10-year for steepening or weakening. I think that's an interesting play when you can put it on. But of course, the non-farms payroll, coming in at 133,000 jobs was twice what was expected, and a kind of a shocker for the markets because what do we get at last year? 20, 30, 40,000 jobs on average per month. But January is particularly noisy due to holiday hiring and beginning of year starting. So hard to say what we'll do over the next couple of months. But it was an outlier to the good for the U.S. economy, and I've been a little bit worried about the employment market over the last couple of months because it has been anemic.
Well, the ADP number was atrocious, so you'd be forgiven for expecting non-farms to follow suit, and instead it blew the doors off. So kind of a wild one. I do kind of suspect that this is an outlier. We did just see a massive revision for last year, mostly downward, so I wonder if this number will suffer a similar fate down the road. Oh, we were 3x off.
Yeah, it's every month I download the BLS, jobs report, the Excel spreadsheet. And what did we have? A birth and death revision of over 1 million jobs to the low side?
Yes, it was ridiculous. Yeah.
I know. I had to change all my numbers going back years. I was like, what happened?
They call it the dismal science for a reason out there, Dana. So yeah, weird and wild stuff afoot. Again, I would have to believe that this number will probably be revised, but we never know. And that's what's shaking up the markets out there today. As we gaze a little bit farther in the rearview mirror, the year only a month and a week or so old, and yet already we've done a lot of living. As we talked about, the metals mostly have done a lot of living out there. And so a lot going on. Black Friday already in silver just a week and change ago. So a lot going on already so far year to date. Let's go to the dark side again year to date because I think you probably guessed what's going on. And also, again, some of these products already exhibiting a whole year's worth of activity in just, a handful of weeks, which is wild. Again, you could probably guess year to date so far, not looking great in the crypto space. And that is where we're coming in at the bottom of our list today. Bitcoin, the big, and the micro futures coming in obviously 4 and 5 today, off about a little over 23, almost 24% for the year. ETH outpacing it again, unfortunately, year to date, off 35% again. Last year was a wild year for many products. We talked a lot about the metals today, but you could certainly do a whole show on the ups and downs of ETH last year as well. It was quite the roller coaster. And now back on the downswing again, just aggressive sell-off in ETH. And then still the big loser for the year, even given its movement this week, is still Cocoa, off about 36, almost 37%. All right, to the upside we go. Listeners, you can probably guess what's topping our list. The question is, by how much? Number 5, we're going out to crude oil, but not WTI, not the one we talk about the most here on the network. Nope. The international flavor. It is Brent, up nearly 15% so far year to date. 14 3/4. If we expanded this to a top 6, WTI would obviously be right behind it. Number 4, we're going out to heating oil, so keeping it in the energy complex, up a little over 16% so far year to date. Number 3, Dana's favorite, it's gold, up 16 3/4% so far year to date. Number 2, back to the ags we go. This time it's soybean oil, up 17 1/3%. And the big dog for the year, at least right now, the way this product moves, we could screenshot it again at the end of the day. It might be an entirely different number. It's silver, up nearly 19% so far year to date. Dana, obviously 2 products that are near and dear to you, lighting up the upside so far year to date. What are your thoughts, sir?
Well, it just goes to show you how extraordinary the rally in January alone for gold and silver have been, that they've gone through this massive corrections and are still up 16 and 19% respectively over the last 5 weeks, which for most years would be a great year for gold and silver. But I don't think, this is probably going to be a year that's reminiscent of last year. I don't think we'll see the outsized gains this year like we did last year, but I think positivity is still going to be pretty good for metals this year.
Well, Dana, that music means we've come to the end of our sojourn through the futures market this week. But before we go, if folks are intrigued, maybe they want to talk a little metals with you, where should they go? What should they do?
Well, our company is American Gold Exchange. We're a national mail order physical precious metals business out of Austin, Texas. Our website is amergold.com. Email address is info@amergold.com. And the phone number is 800-613-9323. We make a competitive two-way buy-sell market to the public for the mainstream, widely traded, competitively priced modern bullion items. And we're also vintage U.S. gold and European gold coin experts if you're interested in a market maker for those products as well.
I'll have you back on just to discuss the logistics of that, shipping gold all across the country and all the nuances therein. But you're telling the folks, forget the Costco coins. Come on over to the American Gold Exchange, right, Dana?
Right. Well, you can buy from Costco, but you can't sell back to Costco.
Yeah,
so we actually do a pretty good buying business from people who have bought from Costco. So it works both ways.
Costco, only one side of the spread there. That's right. You can't really walk in to the food court and say, I want to sell my silver. Where do I go? Or my gold? Which, by the way, I did notice that in my Costco about a month ago, walking through the little food court where they have the hot dogs for about $1.50. Sure enough, a sign right next to it for silver coins for, I think they were $2,000, something like that. It seemed an odd item to be advertising next to the $1.50 hot dogs, but I guess it works. They sell out of those coins as soon as they can get them. If you want to skip all that nonsense, listeners, check them out over there at the American Gold Exchange. Maybe you've got some physical burning a hole in your safety deposit box or up in your attic. You want to find out what it's worth. Check them out, American Gold Exchange. And of course, while you're checking things out, maybe you're futures curious, want to sling a few for yourselves. Check out our friends over there at Tasty Trade, tastytrade.com/podcast, the place to go to see what deals they have in store for you. Not going to do it on the network today. We'll be back after the closing bell to break down the wild day in the options market on the Hot Options Report. Then back again with our usual array of content throughout the week till we're back again next Wednesday. Another episode of the Futures Rundown. Stay safe out there, everybody.
Old trading walks into a bar. New trading raises it. That's Tasty Trade. Keep focused with news feeds that matter. See opportunity differently in analysis mode. Chart your heart out with over 300 indicators. Plus, you can get low pricing, lots of education, and a support team that really gets how traders trade. It's no wonder Investopedia named Tasty Trade the best broker for options in 2024. Genius loves company. Go to tastytrade.com/podcasts and see for yourself. Tasty Trade Incorporated is a registered broker-dealer and member of FINRA, NFA, and SIPC. And now, it's time to break into the futures markets. It's time for the Futures Rundown.
You're listening to the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play.